I'm William Grantham with Ichimoku.com, and in this video we're going to answer the question, how can we tell when GameStop is turning around based on Ichimoku? I'm going to start with going into a little bit of a background on the market action and Ichimoku. If you want to know the nitty-gritty on exactly how it's going to turn around using Ichimoku, if you want to quickly jump to the end, go into 10 minutes and 30 seconds and start there. We are currently looking at a daily chart, and on this chart we can see that the market action did start going up above the cloud at about this point. This corresponds to when Ryan Cohen, the co-founder of Chewy, acquired a 9% stake in GameStop. He eventually raised that up to a 12.9% stake, and this is where you can start to see some market action happening because of that. We do have a bit of a jump up here in late August, and we can see that was on above higher than average volume. This is the 50-period average volume, and whenever it goes above the black line, that's showing that it's above average volume. So we started getting above average volume at the end of August and into September. Now here's what the charts look like without the Ichimoku and the 200-period simple moving average. Now we'll add back in Ichimoku, and I like using the 200-period simple moving average with Ichimoku. I feel it works well. That'll be the black line. The blue line of Ichimoku is our fastest turning line. It's right down here going a little bit flat. Now the reason why it's flat is because the calculation of this line is a moving midpoint. So it looks back 9 periods and takes the highest high and the lowest low and divides it by 2 and then plots the line. If it goes flat, then that means there has not been a new higher high or lower low. The main thing we're going to watch with the blue line is if price stays above it or below it, and if it's above the red line or not. The red line is the same type of a calculation looking back 26 periods. So when it's flat like it is here, then that means that in the last 26 periods, there was not a new higher high or lower low. So flat lines within Ichimoku are very telling and can give you ideas of areas of support and resistance. Now, the purpose of Ichimoku is to just take past price action and then create lines around that. So there's nothing magical about it. It is just helping you to see, based upon past market action, here's what is going on based on these calculations. The blue line is called the Tenkan-sen, and the red line is called the Kijun-sen. But to keep things nice and simple, I'll just be calling them the blue line and the red line. The top line of the cloud is made from the Tenkan-sen and the Kijun-sen, the blue line and the red line. It looks back at the Tenkan-sen and Kijun-sen over the last 26 periods and divides it by 2 and then plots it 26 periods into the future. So it's going to take the current situation and do the calculation and then plot the cloud into the future. The bottom line of the cloud is looking back 52 periods and taking the highest high and lowest low, dividing it by 2 and plotting it out. So when you have a flat line on the cloud, on the bottom edge of the cloud, or the top edge if it's red, the bottom edge of a green, it is saying that there has not been a new higher high or lower low in the last 52 periods. So at the end of August and going into September, market action starts going up, and we can see that by the blue line being above the red line. It goes and consolidates for a little while, and you see the blue line crossing underneath the red line. That's going to be a little bit of a warning sign that there's a possibility that the upward trend has diminished some. However, at this point, market action just consolidates and finds support at the top of the cloud before bouncing up and getting above the blue line and then getting above the red line and also getting the blue line above the red line as well. And then we have another consolidation, even a gap down underneath the red line, and then we find supports at the top of the cloud again. At this point, market action then goes up a little bit more, gets above the blue and the red line again, and does what? It consolidates again. How do we know it consolidated? The red line is flat. This time, the red line provided support underneath market action. And then we have the Wall Street bets and the Reddit influx of new buyers. And we have a big green candle day. A green candle means that the opening price was at the lower portion of the green candle, and then it trades down lower, and that's the little wick you see at the bottom, and then it closes at the top of the green candle, and the wick above it means that's the high of the day, but it actually closes at the top of the full body candle. We can also see that on our average volume, we did have massively above average volume on this day. This would have been your first warning sign of a phenomenal time to get into this trade if you knew that Wall Street Bets and other subreddits were going crazy over this particular entity. But no one knew this was going to happen. They were just hoping it would. We then saw a little bit of a consolidation. I saw this going on in real time, and I did not get into this trade. And yes, I'm sorry, but I did not make it, and other people did, and I congratulate them, and I hope they made a lot of money. So we then see a lot of above average volume as this takes off like a rocket ship and just shoots up. And then it stalls and starts coming down below the red and the blue line. That was the first indication of this market trend having a little bit of a problem continuing. Also, the red candles. The red candles mean that the opening price was at the top of the full body of the candle. The closing price was at the bottom. And then the wicks were just the market action during that day. So on this day, we had on January 28th, we had a massively big candle that opened at 265, had a high of 483, and then closed at 193.6. And that was pretty much the end of the run. The next day, market action opened up inside the wick area of the previous day, and then it started trading down from there. Looking at the daily chart from a long-term perspective, we can see the 200-period moving average has moved up above the cloud. And then the cloud itself is giving us support lines where the flat line in the cloud here is support, the flat line here is support, and even the flat line here is going to be either support or resistance. Right now, we're below it, so it is going to be resistance above. Let's go ahead and put a line in here so that we can see that. So we can now see that 85 is our first line of resistance above us based upon Ichimoku and looking at the daily charts. Now, to determine where market action could be turning around, we're going to have to look at some lower time frames. So first, we're going to go and look at the 4-hour chart, and we can see that it does not give us too much more information other than the fact that we can see that the blue line has crossed underneath the red line. So that on a 4-hour chart using Ichimoku is a bearish signal. Dropping down to a 2-hour chart, we can see that market action has crossed below the cloud. That is another bearish signal, and we can also see that the blue line is quite a bit below the red line, and that is creating a bearish channel. When you have the blue line below the red line, that is a bearish channel. We also can see that market action is starting to move towards the 200-period simple moving average on the 2-hour, and that could give it support. Dropping down to a 1-hour chart, we can see that market action did fall below the 200-period moving average, and it was not support on the 1 hour. We can also see how market action has been just flowing underneath the blue line. So the first thing we're going to be looking at on a 1-hour chart is for market action to get back above the 200-period simple moving average. The second thing we're going to be looking for is market action to get above the blue line. Dropping down onto a lower time frame of 30 minutes, we can see a very similar looking chart where market action is still following underneath the blue line, and we have a big bearish channel that it's opened up between the blue line and the red line, and we're quite a ways underneath the 200-period simple moving average on the 30 minutes. Now, looking at the green line here, this is the lagging line. It's called the Chico span, and all it is market action plotted 26 periods in the past. It can have support and resistance just like market action. It can also be an anchor of market action if it gets caught into previous consolidation areas. When the green line is away from market action and the lines and the cloud, we call it free and clear. And right now it is free and clear to the downside. And so that is showing a bearish momentum to the downside based upon the green Chico span on a 30-minute chart. Let's jump down to a lower time frame. On a 15-minute chart, we can also see a little bit of flattening out here on the blue and a little bit of flattening out on the red. That is our first sign of this turning around. So the next thing we're going to be looking for is for market action to then get above the blue line and then eventually get up and challenge the red line, challenge the 85 support line, and then challenge the bottom of the cloud. We can see by looking at the average volume down here at the bottom of the chart that we have above average volume on quite a few of the days here on January 4th, 2021, as we're coming through this particular thing. So there's either more people selling off, or there's more people buying, or there's more people churning. Let's drop down to an even lower time frame of 5 minutes. Now here on the 5-minute chart, we can see that market action stalled a little bit from coming down enough to get above the blue line for a little bit. That caused the blue line to get close to touching the red line, but it didn't quite make it above. We also never made it above the red line. So we're looking again for market action to get above the blue line and then get above the red line and then pull the blue line up to cross the red line. Now, this is how we're going to tell when GameStop is starting to turn around. So how can we tell when GameStop is turning around based on Ichimoku? Well, here we are on a 5-minute chart. Now, if you want to put Ichimoku onto charts yourself, I do have instructions on how to use Ichimoku for free on quite a few different websites. And you'll be able to do that for yourself. So what we're looking for right now, market action has come up and it's starting to challenge the blue line. We're going to be looking to see if market action can get above the blue line. And then we're going to be able to see if market action can challenge the flat red line and see if we can keep the red line either going flat or starting to tilt up. It'll go up as soon as market action gets above it and we have new higher highs over the last 26 periods. We're also going to be watching the lagging green line to see if it can go up and start to challenge some of the market action that is above it. Here is the cone of possibility for the green line, and we can see how that's showing that it has a little bit of congestion here above it to be able to get up and through, to be able to get momentum to the upside. The green line does show us the momentum possibilities of the stock. Once market action gets above the red line, we're going to be looking to see if the blue line can get above the red line. Then we'll be seeing if market action can get to the bottom of the cloud, then to the top of the cloud, then to our resistance line at 85, and then above the 200-period simple moving average here on the 5-minute, which is at approximately $93 at this time. We can see on the 3rd, some of these conditions were met where we did get above the cloud. We were able to get the blue line above the red line, but we weren't able to hold it for very long before it fell back underneath the cloud and the blue and the red line. So what that means is we use the 5 minutes to start seeing what's going on, but then we start going back up in time periods to be able to see if that's going to help any. We look at the 15-minute time period and we can see that yes, we were able to get above the blue and the red line on the 15-minute chart, but not for very many candles before we fell back under. And then, of course, if we back out even more, we can see on the 30-minute that we didn't even get up to the red line. So on a 5-minute chart, once we can get above the blue line and get above the red line, start backing out and looking at your longer time frames and see how we're doing there. So once it's looking very positive on the 5-minute, we're going to want to see it looking positive on the 30-minute. Once it's looking positive on the 30-minute, we're going to want to see it looking positive on the 1 hour. Once it starts looking good on the 1 hour, we're wanting it to look positive on the 4 hour. And then, of course, after it's looking good on the 4 hour, we want to see it doing good on the daily. And so that's how we can tell when GameStop is turning around based on Ichimoku. We go down to the lower time frames, see it turning around there, and then we start backing out onto longer time frames and see when it's going up from this point. If you want to know more about Ichimoku, I do have a class. Follow the link to find more information. And this is William Grantham with IchimokuWeather.com with how to find when GameStop is turning around based on Ichimoku.